So, episode number 10th anniversary. I feel like it's an anniversary or something.
Well, double digits. We made it, man.
Yeah,
That's impressive.
We did it. So, yeah, we're closing out Q2. We hit the midway point of FY23. Plenty of, this seems like a heavy on the concerning episode. It seems like this past month has been a lot of concerning news, not just in accounting. I mean, I feel like it's across the board. Yeah, there's more opportunities, though, to address those concerns.
I agree. Yeah. And I think no AI in today's conversation. So that'll be nice to take a little break from the AI discussion.
Let's stay away from that until we see what actually comes to fruition, as we spoke about on last episode.
Yep.
So yeah, let's get flowing. This is the FinTech Flo. What's going on, everybody? This is Drew Carrick, co-host of the FinTech Flo.
And I'm Mike Whitmire, co-founder, CEO of FloQast, and co-host of the FinTech Flo as well.
Yeah, so lots of, I would say, as we mentioned in the intro here, concerning news that's happened. We'll get into all of that, but before we dive into all of that, I want to talk about what was overheard at Bitcoin Miami 2023. So this was a week or two ago. There was a convention, because everybody loves a good convention, which I think we should get back into doing convention. Well, what's your hot take on whether, like, should we bring back these like big live event conventions? Like, do you like them?
Yeah, I have thoughts on it. So we sponsor a lot of our partners like ERPs and whatnot. And what I've come to find about conventions and whatnot it's more like kind of summer camp for adults. It's like once a year you go to camp, you meet all your friends, you haven't seen them for a while, you're really excited, you party, you have fun. You go to these as many sessions as is necessary to make, you feel good about the money that you spent to go there, and then you just have a good time and then say goodbye to everyone. It's sad, and then you see them again next year. It really feels like it's just summer camp for adults. People want to have fun. That's the reality of it, and I think people really enjoy them. And now that COVID's a little bit in the rearview mirror and we can get these back. I mean, I've been back to a couple of conferences already where it's really good buzz. People are excited to see each other. You can tell, especially when it's been like 4 years for a lot of people now. They haven't seen each other, so I'm a fan of events. Yeah. How about you? You seem like a pro event guy.
Oh my god, I live for the events. Every event that I was at back when I worked at like Grant Thornton, for example, I was performing the public accounting anthem at every single Christmas holiday party.
Right. I forgot you were the guy on stage at FloQast Go rapping, right?
Yeah. It was funny because I remember the managing partner, Frank, he would get up on the mic and be like, is Drew Carrick here? Petty cash, rapping CPA somewhere in the building. And I'd be in the back, I'd be running to me. He's like, do you mind performing? Do I mind? I was like, I will pay you.
I was born for this moment.
So I was all about that. But the cool thing about, I think, with these conventions in general is like you kind of chalk it up, like accepting the fact that it's probably not going to be the most productive business-wise use of time, but the networking and the social atmosphere and just getting the opportunity to interact with people. I always look at the long-term, like, capitalistic play, which is like there's the short-term gain that comes out of forcing people to work more hours, but the long-term gain out of allowing them to relax because they can then work for a longer period of time and they're happier, and then there's less turnover, and you look at the over a longer period of time benefits. And I think, conferences, like, you chalk it up where like people are going to be goofing off a decent amount of the time, but it's one of those like necessary enjoyments that you get to finally have.
Yeah, totally. And I love that we've embraced that as a company. And that's why with Take Control, our user conference, we legitimately try to just focus on how can we make this as much fun as possible for our clients and potential customers to come and, learn about accounting, but have a lot of fun with all of it. So this is like the only conferences I've ever been to are work related. It's like either for selling FloQast, or for at the beginning I'd go to a lot of kind of meetups or these like SaaStr was one of these conferences, but it's more about entrepreneurship and learning and getting better at like what I get paid to do. This is different, right? This is sort of like you're interested in Bitcoin and you go to a conference. Have you gone to these kinds of things before?
Well, Miami would be really cool.
Well, obviously, but like, have you gone in prior years? When Bitcoin was a little more popular, not as concerning.
I mean, I spoke at I've never been to any crypto ones. Well, I mean, I can get into that when we get to the next slide. But like, I did the accounting and finance show in New York City, which was, a bunch of vendors, and you're talking about different accounting topics. Like, I was one of the speakers in millennials in the workforce and generational differences. They would kind of talk about that sort of stuff, but no like specific topic oriented ones like, I'm a crypto fanatic. I haven't even been to like a Comic-Con or something like that. Not that I'm a big comic guy, but I mean, I guess Civil War reenactments, I do that. That's kind of like
nice.
a historian convention of sorts.
All right.
A bunch of people paying a decent amount of money to dress up and play 1860.
Did you work the medical tent? Were you dealing with gangrene and stuff like that?
No, I was a corporal,
Nice.
But anyway, getting into this whole
getting back to it. Yeah, we're on a bit of a tangent here. And Miami's been meeting up for years.
Oh, yeah.
They were, I think, like 6 months after COVID, they were back meeting about crypto, getting all excited about it. So nothing new here. How do you think attendance is going to be this year versus prior years?
Well, so this happened last week. I mean, everybody wants to go to Miami, right? I just think it's a hot spot. I mean, they've, for better or for worse, they've jumped on like being the first ones to get back on the bandwagon. Now you have a convention in Miami. It's definitely an attractive place to do it.
Yep.
But yeah, so this comes from blockchain.com. They actually had some overheard at this Bitcoin convention in Miami.
Okay.
And one of the individuals was someone, G. Miller, who said, they're from Penrose Partners. They said it's progressive. They had to describe it in one word, progressive. Crypto tools have the potential to increase financial inclusion for a lot of people, but only with the necessary regulations, digital literacy campaigns, and public policy coordination required to get in those people's hands. And then Benjamin from Remote said revolutionary. Crypto has had a huge impact on society for the better. Yet, the same week, there's an article from Accounting Today that says accountants showing less enthusiasm for crypto. So quick off the bat, like what's your stance on crypto?
Womp womp. I love your move from here, although I've heard things said directly to accountants show less enthusiasm. So I'm assuming the attendance this year will be a lower percentage of accountants than in prior years, probably. Yeah, I'm certainly showing less enthusiasm around it. When you look at crypto overall, it is tough because Bitcoin's like the main one, and then crypto's a much broader discussion around all that. But I'm struggling to understand why you'd want to have your money in it right now, given the amount of fraud that's been committed with FTX and then shocker, Binance also committing fraud. Not all that surprising. At what point do you you might want to chill out on crypto before you get comfortable with these exchanges and what's going on, and then you just see the values decreasing as well. And I still haven't seen a good use case for it.
Right.
So I really struggle with it. And the best use case I can hear is like, if the dollar collapses, a lot of people might flee to Bitcoin, and that might become the currency. And it's just like the most, one of the biggest moonshot in like insurance policies that you can buy, basically. Because if you think about it, like if that does happen, let's say that does happen, there's a finite amount of Bitcoin out there. If you got one of them, you're in pretty good. Like in the grand scheme of the world, you're all of a sudden gonna be one of the wealthier people in the world simply by owning like one Bitcoin. If all fiat currency collapsed, but like, what are the odds of all fiat currency collapsing? I just don't think it's very high. And I do go back to, if fiat currency collapses, the people who have the most power today have the most lose from that happening. They're not going to let that happen. And we're seeing it already, right? Like the regulation coming down on crypto is making it really difficult. They're cracking down on Binance and everything. It's just like, I think the SEC is going to make this really hard for crypto companies, and I don't see this picking up steam. So when you're an accountant and you know what's going on behind the scenes with regulation, SEC and stuff like that, you have a little deeper perspective on it, and I could see you losing enthusiasm as a result of that.
Also, if fiat currency goes out, I've got bigger concerns, I think. I mean, like
totally.
The people with all the guns and the power, regardless of the monetary situation, will find a way to make survival happen in the best way possible for them. And that's why I had to stop going down the doomsday path all the time, because I was like, honestly, like we got bigger fish to fry than like, is this job going to be there, or where should I live? I'm like, where's there a cave? I don't know.
You're right. If fiat currency collapses, all of a sudden the currency is not Bitcoin, it's guns and coffee. I hear coffee is the other one you want to stockpile.
Starbucks gift cards. Yes. There's more Starbucks there's more Starbucks in the world, I think, than like JP Morgan Chases is the stat that I heard.
All right.
Do you have any positions on crypto?
I do. I will say I own a little bit of Bitcoin for that exact insane insurance policy. Because I do can be a little doomsday-ish, but no other crypto assets other than that. I don't see a good use case for it, and I don't think it's any of the other ones are like known enough to become a safe haven currency. So that's my overall logic. That said, I'm cool if it goes to zero. It's not like something where if I lose it, I'm going to be.
So I think the interesting thing for the accounting community that you get out of this is that only 9% of users in the forum said they were actively trying to increase their skills in accounting for crypto. And I think that just is a testament to like, when you're trying to pick an accounting topic that you really want to technically dive deep down into, you specialize, and it takes a lot of effort and training and practice to really become a specialist in that area. It doesn't happen overnight, and that would be a lot of effort to go become a crypto expert. You're stopping your social life for a little while. I don't even know what you're focusing on your day to day at work, and you're saying, I'm going to really specialize in crypto, which could be a fleeting thing, which most of the time the people that have crypto are like the kids or the not going to say the less educated, but like there is a certain, there's some people who are like smartly doing it where they're trying to play the crypto market, which that's its own world. But there's a lot of people that are just like, it's a fad and it's a hype new thing. And I think accountants see, like you said, they see through it behind the veil, like maybe the money's not really there. It's not worth the time and the effort to go learn and dive deep into this area that seems like it just could be fleeting.
Yeah, and it's, I know there's one of the big fours here in LA, their crypto practice internally was started by a younger person who just had an interest in it and learned a lot about it and ended up pitching this to the partners and saying they should take on more business. So it was like a really good way for a younger person who may not have had exposure to partners regularly to like investigate something, get an idea going, and then spin it up, and they got some clients in that area, which is really cool. And then I'm sure if you think about it, there are probably a lot of other younger associates around the company who are like, oh, this is pretty cool. Maybe I could start getting into that crypto auditing team and start doing that. I can get out of, whatever industry and do that. So you're starting to learn it, and then it all falls off. It's like, is there really going to be work here in the future? And then fewer people continue to learn about it because there's not viable work for it in the future.
There's nothing more discouraging than thinking the skill that I'm really honing in on becoming great at is going to not be around in 5 years.
Yeah. Well, and because there are two things here. There's, on the one hand, it's like learning about crypto and how to trade crypto and try to make money off crypto. This is referring to like the accounting of crypto and auditing crypto companies, right? That's which...
And the taxes. A lot of it is also the tax implications.
Oh my gosh.
Because that's a whole world and a whole realm there. But I don't know. I just wouldn't want to feel like the person that's trained their whole life to be like the next manager of Blockbuster the year that Netflix comes out, and you've dedicated 10 years of your life to grinding it out through the Blockbuster tunnel. Like, I know VHS now. I know DVDs. I know take-home movie. And all of those skills just useless.
That's a beautiful comparison.
Yeah.
Yes.
So things that are not useless, actually, perhaps is extra important, which large companies have to deal with.
On the topic of compliance around and regulation, right?
Yeah. Mm-hmm. So we recently had the survey go out, infographic and everything. FloQast conducted. $2.4 million annually is spent on corporate compliance and internal controls. And only 26% of survey participants felt that their existing compliance and control management processes added significant value to the organization. 56% saying their compliance and controls management process actually added a lot of stress to their work. Mm-hmm. So this is kind of a segue way to ask, like, you now have created, and now it's public, that FloQast has developed this compliance product. What's the origins of that, of like making the pivot into that compliance field?
So, yeah, first of all, you look at some of these stats and it's sort of like, yeah, no crap. I knew that already, but it's nice to see this stuff quantified. The genesis for the product was we really saw a lot of customers using FloQast already for compliance related areas. And so when we see how customers are using our product, if they're using it in kind of new, innovative ways, you want to learn more about that. And so we started interviewing a bunch of clients and getting their thought process behind it. It was like, oh, that's okay. That makes sense. And then the compliance area that we can really help out with is in the Sarbanes-Oxley world, because we have all that source documentation that ensures, shows you are compliant with your SOX controls, procedures, all that good stuff. And so it was a very logical extension of the FloQast platform. We already help with the close, flux analysis, auto rec, all that good stuff. What are some of these downstream workflows that you work on? And compliance is a big one. And as you can see in this report, right, it's an expensive one. So $2.4 million being spent on compliance and controls management. I've seen that number obviously varies. Like I've seen companies spend upwards of $8 to $10 million on this stuff. It can get really big. And then 26% of professionals feel their existing compliance and controls process adds significant value to the organization. You would hope that would be significantly higher, but that is not the case. Controls are not perceived as adding value for sure. So 3/4 of people, the way to really say this is 3/4 of people do not see any value in the controls that they have to perform. And then 56% of customers say compliance management process adds some stress rather than removing it. Yep.
Yeah. It's a stressful
This
thing.
is my exact experience doing this stuff.
I mean, this is where a lot of people always dream about like having how many people think, oh, I want to have a big organization, I want to have a big company, and you don't think about all of these huge expenses and like administrative burdens that you have to incur as you hit a certain size. It's not like you can just kind of grow and forget about it. You have to have enough to pay to cover the cost of these non-revenue ad lanes and expenses that companies have. Now, you talk about how this was kind of backed into where people are taking the product, they're finding a novel way to use it, and then you make an iteration where you're like, okay, perhaps we can kind of transform our product into that. Just in the tech world and business entrepreneurial world, have you found that companies are likely or are less likely to do these sorts of things? Because I mean, I think you're pretty keen on, if you see a customer or a bunch of customers starting to use the product in a certain way, gets the brain churning of like, is there an iteration of our product that can actually directly solve this instead of it being jerry-rigged to fix it? How common is that in the tech world?
That's exactly, so I don't know the answer to that question actually. FloQast presents, the way our platform is used, I think it presents a pretty unique opportunity where we can see how it's being hacked, and it's, you know, we didn't build it this way on purpose, but you're able to hack it for other stuff. Like the way it came about is you're supposed to have this entity structure within FloQast. So you have multiple entities you're closing the books for, and we're going down the entities, right? And it's like North America, UK, you go through all this, and then all of a sudden it says SOX compliance. And you're like, that's not an entity. What's going on here? And they were like, oh, well, it made sense to track everything in here. So we just kind of hacked it together and do this. And so we're seeing that use case and we're going, oh, well, okay, I really like it's being used for that, but you're losing a lot of the value of like the core application not having that insight. So the first move, so we saw that and we just adjusted, and it was funny because right around the time we saw that, Chris had just taken over as chief product officer. So his first big call as a chief product officer was, okay, we're going to lean into that and have more general workflows that teams can use. And that's where our FloQast Ops product came out. So just whatever work you have on a recurring basis, you can track that through there. Then we see how that's utilized by our clients, and whichever workflow is the most popular, is used the most, we start doing research on that, learn from clients, see what use cases there are, what benefits we get at, and then we'll productize that one. But it's tough because it's not just like a reconfiguring of what we do or whatever. It's like you're embarking on a new product build. So it's genuinely a new product with a new team that's built out. And, we've been working on it for quite a while at this point. Yeah. So really excited that it came out. And I don't know, just selfishly, like it solves a very personal pain point as well. I had to do this crap. I had to implement SOX in my last company and everything. So it's really nice to be helping with this one.
That's cool. Yeah. And now a message from our marketing department.
This is
FloQast compliance. Reduced complexity, lower risk, faster audits.
All right.
Those are your three main takeaways, everybody.
I like it. That's the tagline. Okay, there we go.
Yeah. No, but that's awesome. And then obviously anybody who hasn't checked it out, very timely given the RMS compliance video that we created and given the news that we'll touch on momentarily.
Yeah. Oh my gosh. I hadn't even put that together. Ooh, that's
so
tough.
SEO.
Well, I will say just, on a positive note, team did a great job putting that video together. It looks so cool. It's been so well received. I think everyone did a really good job, like conveying the pain point, showing the solution in a really entertaining way.
That's got to be the future of content. That's why we're here. So let's get to have you read it. This is an interesting one. This is on the Wall Street Bets account, which interestingly enough, they're coming out with Dumb Money. I don't know if you heard about this. It's a movie.
Yes,
is going to be about the whole GameStop.
But there have already been documentaries about this.
Yeah, but this is exciting. I mean, it's got Seth Rogen in it. It's got Pete Davidson in it. I mean, this is, this is going to be, it's funny and it's engaging. It's like The Big Short, that level of enthusiasm.
I didn't process.
It's not a documentary.
I enjoyed the documentaries that already came out about it. With it's a great story. That'll be a good one.
My finance group chat in my in Instagram was going off about it right now. They sent the trailer and everybody's kind of pumped about it. And I got in on the GameStop thing. I was amongst the people fighting for.
You still hold? Total?
I think I have 2 shares left.
All right.
Just to be part of it.
There you go. Yeah, just to stick it to the man a little bit.
Anyway, so this is originally sourced from actually Bloomberg, and they had kind of put it in here. The world's empty office buildings have become a debt time bomb. And talks about how San Francisco to Hong Kong with interest rates, falling property values, and just the lack of people actually filling these buildings. Landlords of downtown cities are having a difficult time as a lot of these leases are expiring. They're being abandoned. The big 3 takeaways for the TLDR for everybody is owners of commercial real estate are walking away from their debt rather than investing more money into it. The problem of declining commercial real estate is a major issue in the global economy, and after a period of sustained growth powered by cheap debt, the issue is set to continue for years to come. What do we do with all of these buildings?
I I mean, I have my own ideas. I've been told they're pretty impossible to execute on, but this is a serious concern. Like this whole commercial real estate issue, I don't know if we're processing how big of a deal it is. And I've been taking a step back and looking at kind of how people are feeling about everything. And I think a lot of people are starting to feel as though we're coming out of like a recession and blah, 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 and good times are on the way. If I could make a bear case for the economy right now, it would be, we just had massive layoffs at tech companies. Those are very high paying jobs. Those people are paying for mortgages right now. When the severances run out, how much longer will they be able to afford those mortgages? How long before those go on the market and start to reduce home prices? Bear argument number one. Bear argument number two. How many of these Airbnb empire people are not filling their rentals because people can't afford to go on vacation? And as such, once they start losing money on their properties, they're going to start selling all of them either one at a time or in a portfolio batch. Number two, mass sell-off going on that could drive the housing market down. And then you have this commercial real estate bubble, which is something that ultimately is going to fall in the lap of the banks to absorb this, because like it says in this article, a lot of the owners of the buildings are simply walking away from the leases. So what happens? The banks have to take it over. And now they're going to have to sell that at a loss. I believe many of these are funded by regional banks. We have discussed on this podcast how much regional banks have been impacted and the perception of them and any concerns there. So this is another thing that's going to get added to their balance sheet that's not going to be a good look going forward. So there's my bear case for the economy. And it all relates around property prices. And it bums me out.
Yeah, no, it's a bumming thing. I mean, I've been planning to, you know, I saw the one meme where it was like the biggest mistake I ever made. This isn't in our What Do You Meme section, but the biggest mistake I ever made was not buying a house when I was in high school in 2008.
Exactly.
I was like, damn it, like that's what I should have been doing. And meanwhile, I had no money, period. Yep. Let's see what the Redditors had to say about this. Imagine, so this is from Reddit Parker 2021. Imagine what they don't have to cover. Bad attitudes, employees, disrespect, or even violence, stealing, on-premise liabilities, more parking for new employees, less power usage, less security staff, less chance of COVID. So this is basically taking that's the whole businesses don't have the desire. Because you're talking about the macro issue, which is like, you know, these things not getting used at the source. It's like, well, if people aren't going into the office anymore, then what's the point of having the building in the first place?
Yeah, my commentary is more around like mass foreclosures, residential and commercial, paired with a massive sell-off. And so
no, that's definitely exists. The dog matrix, now that their leases are up and they aren't going to renew, they don't even have to pretend to care about workplace community anymore. That's your, you know, a little jab at leadership of companies. And I like this one the best. Price Action Help says, they can tell their AIs to occupy them. And Bear 11 says, not a bad play. Instead of workers coming back to the office, they'll be replaced by AI servers and supercomputers. And I was like, wow, that's actually, even though that was said in kind of a snarky way, that's not a bad idea. Like, we need more space to put the computer servers. Fill the buildings with computer servers. They become
server rooms.
If everything's going to be with the crypto and the cloud and the blockchain, well, there needs to be. This is the thing I always struggle with. I was like, but where is it? Like, where is the thing? It's got to be somewhere. It can't just exist in the cloud. People talk about the cloud as if it's just this like Holy Spirit of some sort.
They're just server farms. Cloud is one of the best branding things of all time. Like, shout out to Mark Benioff at Salesforce for coming up with the concept of the cloud. It is brilliant. It's so brilliant. The cloud is a big warehouse with a bunch of rows of servers that's connected to wires that run around the country and under the ocean between continents. That's the cloud. Nothing is up. Nothing is up there. It's all down there.
It's another way of saying the network.
Yeah,
you know.
Yeah, it's brilliant. It's brilliant.
So what's your? So I wanted to hear your hot take. My hot take on what to do with this stuff, especially when it comes to the city building. So the Airbnb, I definitely see that, which is why I've been very bearish on people keep talking about.
Let's focus on the commercial real estate side of it. Yeah, what do we do with all that?
I was thinking, and this is just my hot take, which I think would be really cool, is how many people, a lot of people still want to live in cities for the social aspect, for the just being in a community and having all that going on. Like, there's the desire, of course, to like, you can get a cheap house on a farm out in a prairie. I'm like, yeah, but you're by yourself. And like, hopefully maybe you have like a wife or a husband and maybe you got some kids and you're going to raise, and that's great if you're going to go off and do that. But if you want to have like a life,
kids to work the land.
Yeah. If you want to have like a life, you need to be around other people and like having a community. And I think I love living in cities. I just hate how much it costs to live in cities and how little space you get in cities, which is why people, the balance is perhaps the suburbs. I would love to see these buildings just turn into more housing options to maybe drive down the cost of living in cities. So you could still keep the cities hustling and bustling. It'll help keep other businesses in the area afloat because there'll be more people living in the cities, but they could still work from home. And if they have a little more space, then they can work from home and it's not a big deal. I take away the fact that you live in cities because you work in cities and separate those two. It doesn't matter where you could work anywhere now. You live in cities because you like the social aspect of living in cities.
Yeah, cities still have more people, better nightlife, more restaurants, like all the arts, all the stuff that a lot of people enjoy.
And then you let people choose because if it costs $1,500 to live in the suburbs in a space, or $1,500 to live in the city in a space, and they're close enough to the same size, you get a little more probably in the suburbs. But if you're at least close enough, you just can choose which lifestyle do you want. Do you want to live out in a more spacious, suburban, rural-oriented area, or do you want to live in a more urban, commercial area? And then you get to pick just based on preference of where you want to live, not based on where you work.
Yeah, so I have a similar feeling. I think that a lot of also like malls are going to go under. I think there's opportunity here for. We have a severe homeless crisis in Los Angeles. It's in San Francisco as well. I mean, kind of broadly across California and other cities as well. So can we take some of that and convert it into low income affordable housing for the homeless and everything? That's been an idea that I thought was like, we can just execute on that. Just costs a little money, blah, blah, blah. Cullen was up Cullen's our CTO. He was up in the Bay Area recently at a meetup with some other CTOs, and they were talking about the real estate up there and how it's empty. And he proposed like, well, can we just use it for housing? And they said that the zoning rules in San Francisco actually make it such that the commercial buildings can't really be converted to residential because they're built too wide. And so there are rules around how many windows a home has to have. And so you'd basically have to like split these enormous floors into like 8 rooms or 8 condos or whatever. And so that won't really allow you to get to the affordable housing part of it because like a 40 tower building is 400 units tops. Like, is that really going to turn the real estate market around? And so I was like, oh no, it's stuff like that you come in. So you'd have to almost like knock the building down and do that. Or I kind of like a hybrid of what you're talking about, the community idea. And now we're going back to, we're going to go ahead and pitch Adam Newman from WeWork's idea of living together. Is there a communal living concept around that? Like would younger people live in an office building if it was structured with effectively like small apartments around the perimeter of the building? So everyone got a window.
Yep.
So you meet the requirements there. And then the center is like the community area. So do you have very much like college. You got your dorm rooms, and then you have a center area when you can hang out. I have to imagine most of the people living in these places would be younger, social, want to get things going. And so, it's not like this notion of everyone lives there permanently, I don't think, but maybe that's like a good hybrid for how we start to put some of this to work.
I'd support it. I mean, I would support that 100%.
Yeah, people, multiple people cram into an apartment, or I've heard like 7 people splitting a house in LA or whatever. Yeah. Like, would it be better to have like a nicer amenities in a building and live with more people, but have your own space at the same time?
Yeah, I mean, for me, I like the community social.
There are ideas, but I think like we have a big problem with housing. Affordability for people. We have a big problem with a bunch of buildings are about to become open. Like we got to think creatively about how we use one to solve the other.
And as so many people are relocating, like you're saying, this is the opportunity. Like I came out here and I was like, I got to find a roommate. Like it'd be great even if it was marketed and positioned as like get your feet wet in the city that you're looking to live in. It's a 6-month lease and then month to month after that, or it's a 1-year thing. Figure out, maybe you make friends there and you decide, okay, this is great. Like I found my little squad. Now we're going to go get to our place. And then you let the new, class in, and then they meet and mingle with each other. Yeah.
And you could, short-term rental is a great idea. Yeah. Then you can opt into a longer-term one, whatever. It seems a lot of flexibility. And it's funny because we are going back to, I think this is like what WeWork was founded on, was actually this notion of more around like living together, not working together. Yeah, so here I am pitching the WeWork vision, but I think it might be a possibility now.
Yeah. So now let's get into some of the more concerning news. Well, that was kind of already concerning. So we're already on the concerning path here. We're on our way down.
The accountants got negative pretty quick.
Let's keep being concerned about stuff. This is from the Wall Street Journal. The FTC sued Amazon, alleging it duped millions of consumers into enrolling in Prime and made it difficult to cancel their memberships. Now, this just screams like LA Fitness or like any of these gyms that like, whoa, well, actually, if you want to cancel, you have to write a physical letter and fax it to this office. And in 2 to 3 weeks, they'll get back to you and they'll give you a call. And once you get on the call, then they'll send you an email and print that out and bring it to your local shop. And then they'll stamp approve it and then send it back to corporate. And then they'll cancel your membership.
Yep. That's, there's a direct correlation between the value of your service and how difficult it is to cancel said service.
Yeah.
So
I'll take a read of this. For years, Amazon let people sign up for the $139 annual subscription service with 1 or 2 clicks, but created a 4-page, 6-clip, 15-option cancellation process known as the Iliad Flo. The FTC said, a reference to Homer's epic and arduous Trojan War. Amazon revamped its Prime cancellation process for some subscribers in April, shortly before the FTC filed the case. I have not tried to cancel my Amazon subscription, so I'm not exactly sure. But why do companies do this?
This is a great article. The name of it, I cannot believe that something like this had a project name, the Iliad Flo.
Yeah,
it's pretty damning if that's a real thing. I mean, companies do this just obviously because it's selfish. They want to make it harder to cancel, and you're more likely to just give up in the middle of it if it's a difficult process. Like that's all it is, and it's really crummy. They obviously want to make it as easy to get started as possible, and then that's why I said there's a correlation between the quality of a product you're providing and how difficult the company wants to make it to cancel. Like for us, right? Like we make it pretty easy to cancel because I'm confident in the product that we're offering. We have competitors who do not make it easy to cancel because they don't want people canceling their contracts. So, yeah, I don't know. I'm not all that surprised.
Yeah.
I guess what I'm surprised about is how they're this is the first time I've heard about this. I feel like more companies should be getting sued. This seems to be the regular practice. I don't see many places where it's easy to cancel subscriptions.
I mean, the company's called the allegations false and said it looks forward to proving its case in court. I don't know how you could say it's false. I mean, somebody did it or they didn't do it. It's a pretty black and white. Like, are there 15 steps or are there not? Unless they're just saying, oh, it's not that difficult of a process. There might be extra steps, but it's just to confirm that this person really was sure about it.
Should we be using the term allegedly here?
Allegedly.
So I guess allegedly they created a 4-6-click 15-option cancellation process. Even that, I mean, that doesn't feel insanely onerous. I don't know. But yeah, if you have a whole project name behind it and the intention is to make it more difficult to cancel, and that's in communication, that's going to come up in discovery with a lawsuit and everything, they're hosed, but they're going to sit there and say, oh, this change that we made late, right? Because it says, Amazon revamped its Prime cancellation process for some subscribers in April, shortly before the FTC filed the case, the agency said. So obviously they were doing discovery. FTC was getting all this information, and then Amazon knew something was about to go down and made the change. We'll see what they do. But yeah, not all that surprised.
But this is where I talk about this concept of like net positive capitalism, which I think it gets like overlooked because people associate capitalism with just like, how do I make the most money? And this is where, again, like I said at the beginning, the drawing out of the profit over a longer period of time. What type of perception does this give the average consumer of Amazon or even of gyms? I mean, you still sign up for the gym, I guess, right? But you're like, I don't like it. I'm like, I'm not favorable to the brand because I know how difficult they make it to cancel. I don't know. I'm just wondering, is it unless they're like, well, these people are going to cancel anyway, so we don't need to make them happy if we could just keep taking their money.
So what you're referring to, that like longer term revenue, Ed, our CMO, explained it to me nicely. That's about that. He calls it the brand bank. So when you do something right by your client, you're making a deposit to the brand bank. If you do something that pisses them off, you're making a withdrawal from the brand bank. So Amazon for a long time had a very strong brand bank. And if you look at the way Bezos run the organization, it was always like, what's best for the customer?
Yeah.
What customer first. That's what, at some point, I don't know when it happened. It seems to have occurred within the last like 5 years. I mean, it's been going on for a while, but it seems like they hit this point where it's like, we're at such scale, we don't have to really care about that anymore. Like, where else are they going to go?
That's
where else are you going to get staples delivered tomorrow kind of stuff, you know?
That's the scary thing about these big entities that you become so reliant on. And it's so convenient, so you don't want to not use it, but at the same time, they have the monopoly on that market.
Yeah. I mean, do you like going to the DMV?
No.
Yeah. You still have to. And you give them a lot of money. You give them more money than the 139.
Yeah, that was how we treated like the Long Island Railroad. It was a monopoly. I was like, what other option do you have to get into New York City? You got to take the Long Island Railroad. Well, you guys, your service sucks. The trains are never on time. It's like, well, Find another way to get to the city. You don't have one.
Yeah, walk.
Yeah.
So I think that's, I think just as a company, it's more, I think it's shifted away from a consumer focus and more towards, they've always been about profitability, but now a lot of profitability, dividend payments, all that kind of stuff.
But do you think that this is it short-sighted though? I mean,
I think it's very short-sighted.
Okay.
Yeah, totally.
I think this is always a short-sighted move when you're withdrawing from the brand bank. It's always a short-sighted move. I guess it depends on how long the strategic plan is for what people care.
Yeah. And it's always a risk-reward equation.
Yeah.
So for this, I look at, the reward is they're going to make another $139 per year off each of their customers for making it a pain for them. But I would also argue that, the way this very well could play out is someone could cancel their thing. They go back to buy some more stuff. They have to pay for shipping all of a sudden or whatever benefit you don't get from it, and they get annoyed, and then they just go back to Prime. Whereas if you make it impossible to cancel, they're going to get this rage built up and never go back.
Right.
It's
the
you,
rage.
You at least have some shot at getting them back if you make it easy to cancel. Whereas I feel like with this, people are still going to figure it out and still cancel. You've just made it so annoying that you've really destroyed your brand with them.
Forever. They're no longer a customer forever.
Yeah, I agree. I think you're spot on with how bad it is.
Just enter the room with me for the person presenting this utilitarian calculation here of I got an idea. Here's how we can raise the bottom line. We make it really difficult to cancel. And our stats have shown that at least 37% of the people who want to cancel will stop canceling because it was too difficult. So we'll increase that churn by 37%, right? We'll save that. Is nobody in the room being like, yeah, but don't you think it's going to piss people off? And in the long term, are they not presenting? Are they having that discussion? It's hard for me to believe that they'd be stupid enough to not have that conversation.
Yeah, well, I mean, this is within, this is probably one product manager within the Amazon organization. And I'll bet you it's a spreadsheet that says, here are how many cancellations we had last year. If we implemented project or the Iliad flow, it would reduce cancellations by 37%. As such, we would make this much more money per year. So here's the profitability behind it. And there's some general manager who owns the P&L for that business unit. They don't own the P&L for Amazon at large. They own the P&L for their business unit. Sure. So they don't care as much about the Amazon brand as they care about hitting their numbers so they get their bonus, right? So this is where when you get bigger, it gets so challenging to keep everyone on the same page because incentives are not in alignment. And so they would have to be the CMO of Amazon. Be this is so bad for our brand, you can't do this. And I think the CMO is dealing with maybe worse things Amazon's doing for their brand. Sure.
So I want to get to the next one, but now I'm wondering, maybe this will be a special segment we'll do called Ask the CEO. How are you planning to address that as FloQast grows? I mean, that's a genuine question here that I want to know.
No, it's very difficult. I think incentive alignment is important, but I also think it's a cultural thing. If you at Amazon, publicly traded company, been doing it for a long time. Bezos has always been about profitability. That's what matters, and it's your short-term profitability over everything. And when you're a public company, that happens. So you just got to be. I think when you lose the founder mentality, a lot of that goes away as well. You see that, and then just as you get bigger, you got to make sure incentives are aligned.
Sure.
I say just as if that's going to be easy. It's going to be hard. It's going to be real hard.
We'll be tracking that progress over time.
I appreciate that.
We'll be ready to audit you and give our opinions.
My performance review.
Yeah,
as we open up our performance review cycles now.
Yeah, perfect timing. So behind the hiring boom, there's actually been a sharp decline in the actual amount of work being done. The average number of hours worked a week by the private sector employees declined to 34.3 in May, below the 2019 average and down from a peak in January 2021, according to the Labor Department. So some employers are responding by cutting hours, maybe preparing for a recession. Job market is still tight. And I thought the last line of this was pretty funny. What's happening? People are working less simply because they want to. They just don't want to work as much.
Do you know if this is referring to hourly wage employees or is our community or our people in the CPA world being looped in on something like this?
It didn't specify. I think it's just looking at the labor as a whole. So it could definitely be skewed as far as whether that's actually happened with the county. I don't know.
I'd love to hear if our audience feels like they're working less than they were before, but. Yeah, no.
The thing is, I don't think anybody will ever admit that they're working less. I think everybody's
that's true.
Oh, I'm working so much.
Unless you're on Reddit.
Yeah.
I've heard some people post about how little they work on Reddit.
Sure.
It's some anonymous posting around there. But I don't know. So yeah, I think that's an important distinction. Like, is this companies cutting hours perhaps for other reasons? Like, do you want to avoid overtime, or is it really like a lazy? I have such a hard time reading between the lines here, because is it really about employee laziness, or is it about just hours not being made available in the correct ways, things like that?
Yeah, I mean, I think it depends on what areas of a business you decide to focus on. I've been curious about this. Do you think that, as somebody who wants to be an entrepreneur, perhaps, the ability to like kind of scale and grow a business at a rapid rate that is people oriented, like you have to rely on people actually doing things. I feel very skeptical about anything in that realm where you're actually relying on somebody to do. I want to open up a cleaning business, right? And I'm going to scale it. I'm going to grow, and it's going to be this great cleaning service business. Well, I don't think you can get people to actually clean. I don't think you can get people to do the work unless you pay a crazy amount, which when you do a cost benefit analysis, you're like, is it really worth the strain and struggle and stress it would take to build this up? It used to be like, oh, I'll pay you. And somebody's like, oh my gosh, money. So I'll do whatever. Yeah. Mm-hmm. But now I do see a sort of psychological shift, I think, in just culturally in society, where there's just not, I genuinely think people don't, well, I think this is true. People don't want to work as much. I mean, nobody wants to work, right? But
but the cold-blooded reality is like, you have to. You have to. And you're going to get the best paying job that you're qualified for.
Unless Uncle Sammy gives you a little.
So I think, this 34.3, that's why I do wonder, is it the actual workers, or is it the companies that are driving that and pulling down the, because like in the private sector, there's a big incentive to not hit, I think it's a 30-hour threshold, because they don't have to offer health insurance or something. So a lot of, Walmart does that in a really shady way. They always like schedule hours to the exact, up to the limit of health insurance, and then don't go beyond that. So that's why I have a hard time. That's why I keep saying, like, is it people are working less, or is it companies are not being, as nice about giving out overtime hours and helping people earn more, that kind of stuff. But this back to your original point, like, it's at some point people are gonna have to accept reality that I can't get a certain job like this, and then start doing things that they don't necessarily enjoy. And that's
at some point,
that's life.
At some point, the work's gonna have to get done, Mm-hmm. But anyway, my biggest decentivizer from ever like trying to open up some sort of business that's oriented on having other people doing stuff is that I just don't believe other people want to do stuff.
Well, come on, man. You see FloQast, right? We started a business based on people doing stuff, and we got a bunch of people who do stuff.
Yeah, I think people are compensated fairly. It's an exciting, growing field. There's opportunity to explore the avenue and the passion you want to do. I just think with most stuff, that's like the biggest incentive for like, oh, start a business that does this thing that nobody else wants to do. And I was like, yeah, by getting somebody to do that thing that nobody else wants to do for cheap, so that I can make a lot of money not doing that thing.
Well, it's it's possible. I think the best way to build any company is like with people service is you hire people, you do the job with them for a while, and then you train them, you have them manage people, have them train the next set, and you got to like get in the weeds and do the work with them. Like I think back to early in FloQast, and like Chris and I were doing customer setups together. The first, 20 customer setups, we did that as co-founders, and then brought on Lilith to take that over. And then even Lilith and Chris did the next however many together, and then Lilith finally took over and then taught her team. But like, it takes a while to trust those people that they're actually working and stuff like that. And that's where it comes down to: are you hiring the right people? Are you leading them appropriately? Do they care about what they're doing? And it's not easy, man.
Yeah. Well, that's why I think it's interesting too, because I think about when I used to work in advisory, which as we're talking about concerning things, right? A lot of layoffs, especially those happening in advisory at these big firms. And I think a lot of it is you realize like the stuff I was doing was so templatized. It wasn't like you can scale a business because you can delegate down to me at 25 years old to do a risk analysis on a $300 million company and provide them with recommendations and suggestions. But all that stuff is just cookie cutter templated over from what you gave another client. You pop in the numbers that they gave you. You give a little bit of qualitative analysis around it, but it's the same kind of cookie cutter report that you're churning out. Like nobody at 25 is qualified to give that sort of advice. I'm sorry, it's just like the truth. You don't have the experience to do that. And you end up with this, is there really a value being added by this consultant charging $300 an hour to just do monkey work at that point, which at this point, ChatGPT can just write you the report and, hey, use this one from the other client and here's the new information, go make the report.
Oh, you had to bring up AI. We almost got through the whole episode without it.
All right. So, SVB, First Republic collapsed, so did their employees' savings account. This is similar to my AIG college fund experience. My mom had gotten all of her bonuses in AIG stock.
Oh
And
my gosh.
2008, that was my college fund ready to get going, and that all tanked.
Whoa.
Granted,
I'm sorry about that.
They had put
That
it in two
sucks.
different areas, so it
Okay.
just they had to work a little bit harder to help out. But
Jeez.
but yeah, these, you know, are this whole notion, are people going to be unincentivized to take their bonuses in the form of stocks as part of their savings? But like, also, if you don't do that, then you lose out to inflation. Like if you just put the money under your pillow.
Yeah, I mean, in general, so we give out options and equity at FloQast. In general, I would say if your wealth is concentrated in one industry, like in banking or software technology, maybe, and this is not financial advice, but diversification, something that a lot of people talk about, right? And
accountants love diversification.
Not only not having it in all in one company, but even across different sectors might be a decent idea. So, yeah, if you really believe in your company, you should have some percentage there. But do you want all your eggs in one basket? I don't know. That's obviously a personal financial decision, but I'm sure not everyone lost out on here. But yeah, if at the same time, if you are at the bank and you believe in what they're doing and you want to have more upside and more equity with it, then to each their own. That's their call.
Yeah, I think the first thing has to do with is, are you passionate about that business that you're working in, and you really truly believe in the people leading it and the business model and the future success of that realm? Back to the Blockbuster thing. Like, imagine throwing all your savings. You're like, yeah, I'm going all in on the Blockbuster savings account. Yeah. Again, if you're really passionate about it, sure, but you also have to be diligent to the broader macroeconomic atmosphere and the cultural shifts and changes.
Yeah, dude, because at the end of the day, it's really just an investment decision.
Yeah.
And they chose to invest in their own company rather than diversify across others, and I guess bad investment decision.
I think accountants are very diligent when it comes to this. I have things spread everywhere. Like, I want physical gold, I want Bitcoin, I want real estate, I want a bank's, I want a CD, treasury bond, I want a little bit of everything, which obviously that's the lower reward but lower risk strategy, right?
Yeah.
Just spread it out all over the place. If one of them hits, then it's great, but you don't get as much as if you had it all in that, but also you have a less downside. So
that's the counter argument is if you YOLO on the right play, you can make it.
I'm the guy playing roulette in Vegas that's putting I'm putting $1 on 10 different spots.
I just want a little dopamine hit every time. Yeah. I want a little bit of a win.
So it cost me $10. I won $12.
Yeah.
$2 up. Here we go.
And I will say, going back to my comparison to like FloQast equity and all that stuff, not a totally fair comparison because we're a private company. There's not a liquid market, but for both of these companies, liquid market, as soon as you collected any bonus and equity, if you wanted to sell and diversify, that was that option was available to you. And so I kind of I get it. It really sucks, but at the same time, they made a decision to leave it in there. So it's just an investment decision that didn't go well.
Talk about investment decisions that don't go well. We can't obviously go on without just at least mentioning it, just because it's so relevant. We're not going to go down this at all. Jerry-rigged systems, Logitech controllers, of course, talking about OceanGate, the Titan sad tragedy where the 5 individuals imploded, which we found out that the whole thing imploded. Yeah. Unfortunately, that happens very quickly. But this is why you can't skimp out on checking the boxes. I mean, who's comfortable? How are you that wealthy and comfortable going on something that's not approved by anything?
I have no idea. I have no idea. I would not have gotten on this thing. But yeah, really sad story. Not enough compliance around this area, and it's really the only comfort is knowing that it ended quickly.
Yeah.
And why the heck did the Navy not tell us that this thing imploded early on and allowed for news coverage? And
there's a rabbit hole there that we're not going to get into because I've seen some videos.
Oh, okay. That was I was asking a legitimate question.
This is the old what don't they want you to know, because they're going to just let's milk this story while all this other stuff happens in the background. And who knows?
Okay.
Are the feds talked about bringing the rates back up again, right? They're like, oh, we're plateauing for now, but we're going to go back up. So that's one thing.
Or the Russian coup, the Russian military coup.
I mean, a lot of stuff. Yeah.
Okay, all right, we'll go a little conspiracy angle here, but yeah, this is a sad story, but I do at least take some comfort in knowing it ended quickly, because over the weekend you're like, oh my gosh, this must be this is horrible. This is so horrible.
Thinking of that process.
Yeah, and I mean, it's obviously really sad that people died, but at least it was better than how we thought it was unfolding in real time.
Your lesson is don't skimp out on compliance.
Do not skimp out on
moral of today's episode.
Compliance and
But anyway, after doing that deep dive, no pun intended, let's get into the how should we account for memes. Let's come back to the surface here. This is there's only one today, just because this was the only one that seemed relevant. Instructions for the CPA exam. So please read the questions carefully and answer in pen. The question paper consists of 7 questions. Answer questions on the question paper, and then 4, 5, and 6 are my favorite here. Crying is allowed, but please do so quietly. Do not wipe tears on the exam paper. Good luck.
I love those. I love those.
I mean, it's just, yeah. I'm talking to my buddy Joey. He's actually the co-founder of Universal CPA, which is, I kind of see it as like the FloQast of CPA review. Like they're the young, innovative guys on the block trying to revolutionize the way people study for the exam, using a lot of visual learning to enhance the learning experience and stick with it, stick with it through you.
Okay. So is it a little Becker competitor?
Yeah, a little Becker
coming up.
competitor.
Okay,
yeah.
Interesting.
So I met up with him in the city actually back when he was kind of getting the thing going in 2020. And we've been talking about a little bit of content and stuff like that or whatever. So as soon as I saw this, I was like, oh, totally relevant.
Yeah.
He was talking about like they were making a joke, a little video he'd done on. You show up for the exam and they're like, all right, where's your notification that you're good to take the test? Or we're like, oh, I got it here in my pocket. It's like, okay, yeah. He's like, all right, I'm gonna need to probe you. I'm gonna pat you down, in all of the information and everything it takes in order for you to actually go through with the exam. It's a process just to start the test. So you're already like freaked out by the time the exam begins.
So I studied for FAR during busy season. I think I've talked about it on this podcast, but the schedule was I would arrive at work at 6 and study from 6 to 8:30 or so, and then work. And then I'd end my day. I had an agreement with my boss where I'd end my day at 8 and I'd study from 8 to 10. So I did that for busy season and then study weekends and stuff. Did it for all busy season, showed up to take my exam and forgot that piece of paper. Oh. And the woman goes, no, you can't take the test if you don't have this piece of paper, and I cannot give you any grace on the deadline. She wouldn't even give me 5 extra minutes past the deadline. So I frantically get in my car. It's 5 p.m. on Friday. And now that you live in LA, you know what the 101 is like at 5 p.m. on a Friday. Okay. And this is pre-COVID days. So, woof. I've never driven faster in my life. Just so many illegal things occurred back and forth to get that exam taken. And then I got there with 1 minute to spare before the deadline. I cannot believe I did as fast as I did. I'm like breathing so hard. I'm like running up the stairs to get there on time. I sit down for the exam and just like the most frantic, psychological place maybe I've ever been in my life, considering how much work I put into it to get there. Sat down, 75. Wow. Let's go.
That's a true come up story. That's a Rudy story.
I couldn't believe it, man. Oh, I forgot this stupid piece of paper, but it was all good.
Yeah, this is from the audit memes. So shout out to the audit memes for that one. Final thing here from our concluding cycle. Bosses are pushing, I thought this was a little cool footnote actually that we had on here. Well, actually, sorry. So now, to the concluding cycle, I had a couple footnotes. Latest layoffs at KPMG, 5% of the workforce. So that's the most recent news. I had my friend actually texted me as it was happening. He works at KPMG, and he's in the tax department. And he said that I think 2% of the 2% of the 5% was tax actually.
How much was
I thought
audit?
was interesting. Audit was not really it. It was basically 2% tax, 3% advisory.
Tax surprises me. That does, but the audit, I'm not surprised by that one.
Yeah. So he basically told me, because I was looking at what I was like, did they say why? As far as they just didn't hit their revenue numbers. So I don't know if it's just a reduction in tax work that's kind of coming in. It's more the nature of that, and I don't think it's got any less complex. But perhaps like clients that are worth being taken on by large firms like this, perhaps.
There was probably a ton of tax work related to the PPP stuff. And then when the IPO market is booming, there's more tax work to be had.
Yeah.
And then advisory, obviously, when there's not as much money flush at companies, they don't do as much advisory work. And so I think I can start to piece together why that makes sense.
Yeah.
But the audits must go on.
They have to.
Auditors don't get fired.
It's one of those things, like I said, is like, hey, you want to start a big company? Guess what? You're going to have to get audited. How much is it going to cost? A lot. Just be ready.
More than you expect.
Other little footnote here. House is looking to enact a 2-year bonus depreciation of $2,000 per taxpayer on top of the standard deduction. I just thought that was at least a nice little encouraging piece of.
Wait, say that one more time.
So the House is looking to enact just for 2 years, the next 2 years, a bonus deduction of $2,000 per taxpayer
Just for funsies?
on
Just
top of your standard deduction to help combat inflation.
All right, whatever. I'll take it. Sounds good.
I'll take the extra $2,000 bucks,
Yeah,
right?
sounds great.
I'll keep that in my pocket. And then the Monday in office workday. So you talk about focusing when you have to show up at 6 a.m. and start studying for the CPA exam and do that. Focusing now is, I think, that's the battle of the future. How do you actually focus? Because nobody wants to. Bosses are pushing for more in office Mondays. What mentality are you of? So they said that, Mondays lag behind most other days naturally. People are coming off the weekend. They're like, I'm just going to work from home today. Mondays and Fridays are probably definitely the favorite days to work from home. So you don't have to deal with traffic on Friday. You don't have to deal with getting up early on Monday. Makes your weekend feel a little bit longer, perhaps a little more peaceful. But some people said, employers are arguing it's better to get back to the office early in the week, start your week off with like a strong in-person collaborative environment, and you'll be set up for a week of success. Employees say, no, I kind of like to ease my way into the week. Is that just a way of saying, like, I don't really like working on Mondays?
Yeah, yes.
What's your mentality of like easing into Monday just as a way to be permitted?
So even pre-COVID, so we're in the office anyway,
Sure.
I would kick off my executive meetings on Mondays. So we get together as a team, we talk about what's up for the week, and then go from there. And then you had the week to basically execute on everything we had discussed on Monday. As we got a little bit bigger, I want to give the executives more time to gather information on Monday, have a discussion on Tuesday at our C-level. We call it a C-level meeting. This is the C-suite. And then you have the rest of the week to execute from there. So I do think it's important to like get together early in the week to get the week set and get stuff done. And Monday is obviously first day of the week. And yes, the data is showing. So I watched this really great, I listened to this great podcast with one of our CFO of Snowflake actually. And so Snowflake has recently gone back into the office. And he was explaining that part of why they made the decision is, Snowflake warehouses data that's used by businesses. And so through their own data, they can see how much people are working.
Wow.
And it's not like on an individual basis, but just macro, like, hey, how much data is moving around on Mondays, Tuesdays, Wednesday, Thursday, Friday. And the Monday and Friday thing was so low that they're like, we know people aren't working on Mondays and Wednesdays. And so they made everyone come back to the office, and that's what they're doing now. Wow. And it wasn't met well, but they're like, look, we have the data that proves it. And if you don't want to be here, that's fine.
Wow.
Yep. So it makes sense to me. I will say, like, philosophically, before we were even working from home, I do agree that getting together early in the week sets the tone and gets you and allows you to be more productive. Like, could you imagine if you just kind of showed up and like meandered for the first 3 days of the week and then you had a meeting with your team later to talk about stuff? That just doesn't make any sense. So I can see the argument for both of these things.
So productivity wise, when are you doing like the prep for the Monday? Because that's always the thing I think people dabble with. Like, you got to just like turn your brain on, like be sharp 8:30 a.m. on Monday to get ready for the 10 o'clock, 11 o'clock meeting. You prepping everything. Is that when you're doing it Monday morning, or is there like a Sunday planning routine? I know that's a executive leadership hack that a lot of success mentors talk about. Or that's a personal
preference. I mean,
what do you do
earlier in the day? What do? I just show up and rip it. That's it. I don't run like insanely structured meetings. It's like I want to have more collaboration and conversation with our executive team, and I found that like whatever matters the most just bubbles up and is what's discussed that week. If you have a full agenda, you can get into just like readouts of updates. It's not a good use of time, and just like let's have some collaboration time, and then also it leaves some time for just like shooting the shit about stuff and it's not all work related at that point. So I think it's important, but some people jot down notes ahead of time and have topics they want to discuss when they come through. Some people prepare a presentation and are like, hey, I invited my team, we want to run through this issue that's happening right now, blah blah blah. So there are different ways that it gets approached and different prep motions for it, but you should be ready to work at 8:39 Monday. Like your brain should be clear. You should be ready to go. That's the expectation of the people who are paying you to do work.
I think I do like that, but let the main topics bubble up to the top, because I think so much time is spent often by people, and this is like the old 20-80 rule, where it's like people unfortunately spend 80% of their time on people spend 80% of the time on the things that don't matter and only 20% of the time that does. But like, you should switch that and spend 80% of your time on just like the one thing that matters. Like, spend 80% on just 20% of the work, because that's like the main core to your business, revenue driving or expense reducing tasks and activities. And from a topics of what's important to talk about for the week. I think if you allow that to bubble up, then like those pressing matters, which are the ones that actually need to get addressed versus, actually will get discussed versus if you have an agenda of a bunch of stuff to talk about, half of them could make no difference. It's just like, what menu do you want to use for the event that we have on Thursday, right?
Yeah, and I mean, I've heard it as bad as I know one company where the co-founders run a daily meeting with their vice presidents and above. It's a daily meeting where they do a status update meeting. It's just providing a status update, like how much, and that's 1 hour a day of salary that is not cheap. You add that up over the course of a year, 52 hours of meetings with 15 executives who are all getting paid a lot of money piles up. That's an expensive meeting for like no reason at all. And I'm sure most of the people who are sitting on that meeting scrolling the internet or doing whatever, and it's just like not effective. So
and then the prep, the amount of time wasted prepping because you want to look impressive during that meeting. So you spend an hour beforehand prepping something to then deliver it for an hour that you spend 2 out of 8 hours of your day was just spent on status update.
Yeah, it's not efficient. So I don't know. Yeah.
All right.
But Mondays are big. You got to kick the week off right, and so I don't think this is all that.
And finish your week off strong with the FinTech Flo. There's the FloQast Studios plug. Now a message brought to you by your producer at FloQast Studios.
Perfect.
Yeah. All right. Well, this is an episode that took us to all depths of the concerning areas, but I think we ended at least on an optimistic note, a good takeaway for how to be productive for the week. So
yeah, well, in elevating accounting, it's nice to see that audit jobs are safe, continue to be safe. That's really, I feel bad. Hearts out to the people at KPMG Advisory and Tax. That's a bummer, but audit is always available. That's how it goes.
All right, everybody. Thanks for watching. Thanks for checking out the FinTech Flo. As a reminder, this episode is available for CPE credit, and you can get that at Flocademy or on the Earmark app. Details are in the description below.